Hello and welcome back, guys. So you did enjoy the latest video that I made about Google, in which we took a deep dive, and we're going to be doing the same thing here with Meta, a stock that has been completely annihilated, and it's been down at about 136 bucks yesterday, which is absolutely insane for a company of this sort. It's down almost 62% since its 1 year high. And we're going to be examining what happened during its latest earnings report and what we're expecting of it to happen in the upcoming quarters, whether it's an interesting buy. But we're going to be doing it in more detail, actually. So we're going to be taking a look at the exact reports here. So let's start with analyzing it a little bit. Now, the first thing that you will see here is some highlights about some remarks, I should say, about what Mark Zuckerberg, for instance, has said. And you will see that it was good to see positive trajectory on our engagement needs this quarter coming from products like Reels and our investments in AI. Similarly to Google, it looks like Meta obviously is also investing in AI. It should probably help them with the Metaverse as well. And you will see that they are pretty much increasing energy and focus around key company priorities, which one of these is going to be the Metaverse. Whether it's going to be doing well or not, we are going to see. But you will see here that in terms of the total revenue, the company is slightly down from its pretty much corresponding quarter back in 2021, and expenses have gone up too. And overall, the net income that the company has enjoyed here, you will see that it is down as well. Same thing with the diluted EPS. The company didn't do as well as you would expect, and this is why actually the stock price headed down quite significantly in the past few quarters. Now, this is a company that is, of course, right now really aiming to get some things going towards the Metaverse. And so they are spending a ton of money on this. This is actually a big investment for the company, and we're going to see how that turns out to be. But you are looking here at the fact that the company's users are still increasing over year, as you'll see. Pretty much every type of user here, like Facebook daily active users here, you will see that there is an increase of 3% year, for instance. So generally speaking, it looks like the company's users are increasing here. And the rest of the article is pretty much talking a little bit about what the company is expecting here in terms of expenses and what the company's capital expenditures are going to be. Now, it's nice to see that the company is expecting to cut down on some expenses, so lowered expenses, lower total expenses here in the range of 85 to 88 billion, lowered from a previous outlook of 87 to 92. So you see some significant actually decline here in terms of total expenses. The company is actually spending less. It's going to be spending less in the upcoming quarters. Now, they're going to be getting less revenue as well. This outlook reflects a continuation of the weak advertising demand environment that we experienced throughout the second quarter, is what they said, which we believe is being driven by broader macroeconomic uncertainty. Makes a ton of sense here. So guidance assumes foreign currency will be an approximately 6% headwind as well. Obviously, the company has a lot of business going on with the international markets here. You can kind of take a look at it over here, advertising revenue by user geography. You will see that other parts other than the US and Canada, like Europe, for instance here, or Asia and Pacific, you will see that it's quite a lot, quite a big chunk of their advertising revenue here. So it makes a ton of sense that they are losing a little bit of money because all sorts of currencies, foreign currencies, other than the dollar, of course, have been going down precipitously in the past few months. And so, yeah, they're losing a little bit over that as well. Now, I do want us to take a look at this very interesting little table here that Meta has provided, and you will see that it goes back to Q4 2020 and actually continues to Q2 2022. So you basically read this from left to right, and you will see that the total revenue of the company was doing using all sorts of sources of income here, like apps revenue or Reality Labs revenue, it was 28 billion over here. Again, remember, this is in millions. And this was 28, and right now it's 28.8, which is an increase. But you will see that in the meantime, the company has been achieving much better quarters as well. So you do see a little bit of a decline overall, or I should say much less growth than expected here. And the other thing, total income from operations similarly going down quite a lot over here. The company has been losing some of its income pretty much, and its operating margins are also suffering from 46% going down to 29%. So of course we do know that the company has been having some struggles lately, and again this is a big reason why the company's stock price has been going down, and it may be an interesting opportunity. However, the valuation is very important as well. If it's something that is very cheap, we can potentially get it for the long term, and a company's revenue is not going to be going down forever unless they have like some really big issues here, and every company can have a few quarters or even a year that's going to be bad. Again, sometimes it really depends on the macroeconomic conditions, and yeah, the company has definitely suffered here. We do know about some competition as well, so there's always some competition when we're talking about these companies, even though Meta is a strong moat when we're talking about advertising. It's not really easy to replicate what they're doing. And even if you think about TikTok is different. It's more like sort of like tidbits. It's like small snippets of action, while Meta is pretty much building a community around people with groups and pretty much having people talking about similar interests in there. So it's a little bit of a different thing, and with advertising, targets matter a lot. So targeted audiences are very important for advertisers, as you can understand, which TikTok is not that great in. It's more like, we target everybody and we get money out of the big amount of people. Okay, so let's move on and take a little bit of a closer look at some other things about Meta here. Something that you do expect here, a big increase in terms of research and development costs over here, marketing and sales as well. So the company is spending more, and we do know that they are spending a lot for developing, for instance, the Metaverse. So they are spending a ton of money here. So we do know that they are going to be cutting down on some expenses, and we are going to talk a little bit about it because they are going to be laying off some people as well. But overall, they have been spending significantly more in the past few quarters here, aiming to do much better with the Metaverse. Now again, the Metaverse is going to be a bet, and a pretty large one at that. We're going to see how it's going to be doing, but you do see here that the company has been actually spending quite some money in the recent quarters. Now, of course, the elephant in the room, I should say, the company's net income has been going down in the past few quarters. Again, issues with the macroeconomic conditions, competition as well, has made Meta suffer and actually lose quite some of its net income here compared to the previous quarters, like you'll see Q1 2021 and Q1 2022. So it's comparably worse over here. And again, you can see here all the different comparisons between the quarters, Q2 2021, Q2 2022. The company is doing worse in terms of net income here. Again, we actually can't get this at a good price just because this is happening right now, and just because we are in a current economic climate in which allows this company to go down and potentially give us a nice entry for the long run. Because again, there are many great things about this company that we have talked about in the past, and things may be seemingly going south right now, but this won't be happening forever, and there won't be many times where you can be buying Meta at such a low valuation. And after a few years, at some point, it's probably going to be a completely forgettable scenario what has actually happened here. And so we're going to be looking at much higher revenue growth for Meta, more likely than not, actually. Of course, there's always some risk, but based on the valuation overall, this looks like it's going to be the more reasonable scenario for the upcoming years. And obviously, capital expenditures, the company is spending a ton. As you'll see here, the company is increasing its capital expenditures. Again, things that are expected here based on the fact that the company is really investing a lot of money in the Metaverse. So a lot of money being spent here. And this is something that a lot of investors haven't liked, and understandably so. It's a large investment, and we really don't know how the Metaverse is going to be doing. A huge bet there. Good thing, however, the company and I should say Facebook is still relevant, and it's still increasing its daily active people over here, as you'll see in these nice charts, the family monthly active people. Everything keeps increasing here, nice and solid. And this is the most important thing after all. We do want a large user base that keeps growing. Now, at some point, it can't grow more because pretty much almost everybody in the planet is already using Facebook. And regardless of that, the fact that the company is not losing active people is a really good thing to see, and it's still increasing that in their arsenal. Nice to see as well. Now, this is a very important figure here, the family average revenue per person. We do want to be getting as much money as possible from each person pretty much visiting Facebook. and you will see that this has been dropping recently. Again, this is something that is very understandable. In this current environment, a lot of people are actually cutting down on costs, and even though you are advertising, you will be losing some of your effective revenue per person just because people are actually spending less. So this is an important factor in that, and this is why you're looking at this happening in Q1 2022 and Q2 2022, and not before that, where people actually had like stimulus and all that, and they could still spend money. So people cutting down on spending is a factor on why you're actually seeing this average revenue per person going down. But it doesn't really scare me too much. I think this is going to eventually stabilize, when the market actually goes back to normal and inflation finally actually gets dropped a little bit, gets reduced a little bit, because right now it's still kind of rampaging the world. Some interesting points to see here. Zuckerberg's 71 billion wealth wipeout puts focus on Meta's woes. And as you'll see here, Zuckerberg's wealth has declined significantly since, Metaverse, or I should say, Facebook has actually really dropped in price, in its stock price, and he has lost, on paper at least, 71 billion over here. And it's one of the people who has actually lost the most money, with Jeff Bezos being the second. Now, of course, obviously, when you have such a large portion of your wealth tied to a company, and when the whole stock market goes down, you're gonna be getting a decline in your overall wealth. That goes without saying, and this is why you're seeing pretty much everybody here suffering. But the thing is, the company is still the same, and once you exit this current slump, you are probably going back to normalcy. And in the meantime, us as investors, or even Mark Zuckerberg himself, of course, will be getting some extra stock. They're getting paid with stock, for example, they're getting it quarterly. And so it's a good opportunity to amass some stock before it actually starts increasing again in terms of its price. However, this kind of issues, I should say, even though temporary, they do cause the company to take a little bit of a different route here in what they're doing, investing wise in with their operations. I kind of had to pause a little bit because my Google Home somehow tried to talk to me about something, even though I didn't say any okays or anything of that sort. Okay, but let's go back. Another interesting thing that you'll see here: Meta looks set to cut costs by 10% or more over the next few months, says report. Again, when you're looking at this kind of an environment, the fact that even on paper a lot of money gets lost, the company will be trying to cut down on some costs. They will be trying to make some more money in order to appease investors and actually get more to join the company and actually buy the stock, increasing the price. Because right now you have to also remember that a lot of companies like Meta, for example, is paying their employees with a lot of stock. So stock-based compensation is prevalent in Bay Area companies, and this really hurts their operations. The stock going down because it affects the morale of employees. So they really hate that. So during this period, they will be looking to cut down on costs. They will be looking to make operations better, make more money, regardless of the fact that overall the business is doing well and will probably keep on doing well in the upcoming years. This recent situation has definitely affected everybody in the markets, and so we are going to be looking at these potential cutting costs over here. As you will see, they have recorded a 22% year-over-year increase in costs and expenses, totaling nearly 20 billion over here during its second quarter. They have been spending a lot, and so this is why they are getting to potential layoffs over here. Another interesting article here that I was taking a little bit of a look at is the time for bearishness question here. So this is a little bit of a bearish article talking about Meta in the short term. So the author here thinks that Meta will be going down in the short term, which does make sense. It could happen for sure based on what is happening right now. There's definitely some risk, and there could be even some more downturn here, although you never really know what's going to be happening with the stock price of any stocks really, or the market. For all we know, tomorrow we could be having a bullish market, or at least for a while, and then going back to bearish again. Nobody knows really. But you will see here that the company again being down quite significantly over here from its highs. You will see that the article is basically kind of comparing Meta to ARKK here, but it has like a few reasons here to avoid Meta. And you will see that the core advertising business is struggling for growth. And again, it's something that we do know about. There is increased competition, but I think, and I firmly believe, that this has a lot to do with the weakening economy. I think this is the most important thing here. I don't expect Meta to keep having weakening growth in terms of its advertising business. Again, because it's very valuable. It's very, very valuable to small enterprises, for instance. It's a great way to advertise your products. It's not the same advertising on TikTok. It's massively different. The targeting is there with Facebook, and it's much, much more important. And this is why I do believe that once the economy goes back to normal, Meta is prime for really booming in terms of its stock price and its operations. So we'll see whether that's going to happen, of course. Now, the second reason that the article is claiming here that they are aggressively investing in an unproven area, and I definitely agree with this one. In fact, I'm not a big fan of the metaverse myself. I have trouble understanding what kind of money they're going to be making there, especially when they are spending a ton in terms of like many billions for the metaverse. But that's something that I will have to go with, and just hope that the company will be able to basically make a lot of money out of this. It's an unknown area. It's an investment that we really don't know whether it's going to turn out to be a good one or a bad one. It could make billions for the company. It could also flop. So we'll see how that works. But regardless of that, their advertising, their core advertising business is so strong overall that I'm willing to take a little bit of a bet here on the metaverse, even though I don't really like it myself that much here. The third one, and less discussed reason to avoid Meta, is because of an aspect that I believe too few investors are putting enough consideration. And he's talking here about the dollar pretty much, and the fact that Meta's business is pretty much overseas in many situations actually, and so it does get hit from the dollar. Now that wouldn't also concern me too much. I think this is going to be stabilizing eventually, also maybe in the next few months or so. But you will see that the fiscal period ending potential consensus estimates here for Meta's revenue growth is looking at even some minus values here, like minus 2%, then 4%, and then 7%. As you'll see again, these are the pretty much the quarters over here. And so we are potentially looking at Meta growing at a lesser rate, is what the article is saying here, which we have factored in our calculations previously. So if we go back to our tool here, you will see that if we go to our stock evaluation tool, you will see that Meta obviously has been growing tremendously through the past few years. But what happens if we actually try to use much less revenue growth than expected? Like, for instance, you will see that the average has been like 34%, which is outrageous, of course. But what if the company, let's just say in the next 5 years, grows 5% and then 7% or 9%? What's going to happen then? Now, their net income margins are sitting at about 33% over here, so they are still rather high for Meta. And we're going to go a little bit more reserved here. Let's go 30, 32, 33 over here. And in terms of free cash flow margins, we're going to go 90, 100, and 110. The company does achieve 110 in some situations here as well. They're sitting at about 90, 100, and 110. I think that's fair. And in terms of an annual return, we're going to go 13%. So what do we get out of this one? Again, remember that the stock price is bust so much, like $136, that even our low estimates here for a revenue growth of 0 is still very green, super green. And again, even a 0% here, even no growth at all for the next 5 years is still green. And probably even a minus 2% could potentially be a green. Let's just say that. Yeah, even that is a green, which is absolutely outrageous. I mean, even if the company actually loses revenue for the next 5 years, and this is going to be an about 5% and about 10% actually loss in the next 5 years, a little bit less. It's still gonna grow, and the thing is, its stock price is actually that small, that low actually right now, that it's still a buy even in this scenario, even as the revenue growth goes in negative territory, which we don't even expect to happen. So we do still expect that the company will be increasing the revenue just at a lower pace. So this is why the metaverse itself being, of course, it's a risk, but Meta as a stock right now is just so cheap to avoid. These kinds of valuations here are absolutely outrageous. And the company has been also buying back tons of share, and they're going to keep doing that, of course, because the stock price is super cheap right now. And so this is why Meta is definitely one of the companies that I'm definitely buying, and I have bought. And I will probably keep on buying if it keeps going down. And I think that this is a massive opportunity for the future. But do let me know what you think. Leave a comment below and let me know what you thought about this video, what you think about Meta, whether you are buying right now or avoiding it. And remember to leave a like and subscribe, and I'll see you in the next video, guys. Bye bye for now.